Thanks for joining us again. Welcome back to Dipcatcher Radio. Today, just a couple quick topics. We're gonna have to wrap things up a little bit quicker than normal, but today, the things we're gonna talk about. Colleen brought some, she sent me this article that showed that a major corporation in the United States is starting to hold Bitcoin on their balance sheet. And that feeds into a lot of stuff we've been talking about on our weekly calls. So we'll talk about that, and then also we will talk about this new type of cryptocurrency that's emerged over the last couple of weeks. It's really caught a lot of attention, and it's got some really interesting price dynamics as well. So those are the things that we're going to talk about today. So why don't we get started? Let me share my screen. So here I found a company called MicroStrategy. They bought $250 million of Bitcoin, and so this made news probably because anything that is bullish for Bitcoin, like all the Bitcoin publications are going to write about it. So this isn't really like necessarily big or like some new thing, because companies have been holding Bitcoin for a long period of time. Companies like Overstock.com, the CEO of this company was like a major early Bitcoin proponent. I think they were one of the first sites to accept Bitcoin, and they were known to hold a pretty big stockpile of Bitcoin at one point. With this company in particular, I don't really know what MicroStrategy is. Let's see what we can, the publicly traded business intelligence firm. So this is a company that corporations hire when they need to get information on some type of maybe they need to like spy on a competitor, or just whatever type of thing that they need done. This is like one of these big consulting firms pretty much. And so they reported that they purchased 21,000 Bitcoin. And it looks like they did it as like an inflation hedging fund. So that's actually really interesting that a major United States publicly traded corporation has a fund to hedge inflation. And so, what this means is that, like previously, like companies would hold Bitcoin mainly because it was like something they used as like a payment system. But now Bitcoin is emerging as a solution, to inflation, and also, a form of like an asset that just requires very little, cost of like maintenance, and it's very liquid. And so I think this really speaks to the maturity of just like the Bitcoin ecosystem, where maybe if this was happening 4 years ago, maybe Bitcoin could not have been a solution for this, but because it's through every boom and bust cycle, the ecosystem just continues to develop. Bitcoin is becoming something that a major corporation can allocate, a sizable amount of money to. So I think that's, and that really ties into what we talked about a couple weeks ago about how every 4 years there's like a new narrative around Bitcoin, where early on it was like kind of like an experimental, peer-to-peer cash. Then it moved to, being about like fast and cheap transactions. Then it moved to programmable money, and then it moved to digital gold. And that's kind of where it's at now. But where I think it's kind of going to is that it's going to be viewed as a reserve asset. So like something that, corporations, hold that, households hold it as like, you can build like your family legacy by building up, in your Bitcoin, like, you want your Bitcoin to be passed down through generations. And like nations would be holding Bitcoin on reserves. And so that there are probably other major companies that are doing this exact same thing, but they're not advertising it, maybe because they're a publicly traded company and they're going to have to report it anyways. But I think this is like, it's bullish for the price of Bitcoin, but things like this actually kind of, make me feel anxious because they just bought 21,000 Bitcoin. And of these one, like, it's unlikely that I will ever own one of these. Like if they're holding it as like a long-term like hedge, like, they just took 21,000 Bitcoin from the supply that you could have bought, like maybe they're the ones that were buying, like how on the price or on the chart, the price, went from 8,000 to 4,000 and then it pretty much went straight back up. Maybe they were in there buying at the, they were the ones in there catching the dip. So, yeah, this is like exciting because like, a major holder who has long-term time horizons, like, this isn't just like a day trader who's going to buy this 21,000 Bitcoin today and then sell it tomorrow. Like, they're buying it as part of like probably a multi-year strategy. And so these are like you as a Bitcoin holder, you like to have these people in because they help remove supply. But on the flip side, they're buying and holding Bitcoin that you otherwise could have bought. And so it's kind of like a dual-edged sword where, yeah, they help the price go up, but they also, make it so that the dips don't dip as much and you can't get as much as you could have. So I always, yeah, this is exciting. And it's like a testament to how much Bitcoin's evolved and proven itself as like suitable to be a reserve asset. But, now a lot of companies are going to wake up to this, and maybe this is what, pushes the price up out of the reach where, a regular person might be able to put together, $11,000 and acquire some Bitcoin. But, it's this type of activity, major sources of funds accumulating a lot of Bitcoin on long-term strategies. That's what's really going to push the price up, especially when that FOMO kicks in. Like, we had retail FOMO, just of regular people, and that took it from, 1,200 to 20,000 in 2017. Imagine the FOMO of like, major corporations who are, sitting on the sidelines, like, arguing in the boardrooms about, are we going to do this? Some people say no, other people say yes, while they're arguing, if, other major corporations step in and take that Bitcoin, then, they're going to be left on the sidelines. And when that FOMO kicks in, that's really going to move the price up. So this will be interesting to see play out. This is definitely the first of many that we'll start seeing on this front. But it is
I'll say this, Brian. I feel like you trained me well because I also got a pit in my stomach when I saw this. Like, I didn't feel happy when I saw this. I was like, oh, damn.
Yeah, it's hard because it's like you want the price to go up, but also like, you're also looking for the price to go down. And, this just like makes the price not go down as much, so it's kind of like a dual-edged sword. But
yeah. Okay. All right.
Yeah, this is really interesting. But yeah, that's
thank you for translating all that. And so cool. Thanks, Brian.
So does anyone else have anything to add about like, concept of companies like holding crypto as a reserve or it's funny. I even recommended the founder at our startup, literally since I started, I was like, you know what, like, we need to hold a position. Price goes up, that's good. We just, made money. Price goes down, that's good. We can borrow against it and spread that out over a couple of years. And, some company like, just some companies, it makes sense if you have like a big stockpile of cash and if like you are comfortable in that setting. But in other companies, it's a tough decision. And so it's, I wish that we were doing, more active in this, but there are things, that even hold companies back, like, based on how they're structured, what type of like, what the rules of their board are, all types of things can actually make it difficult for companies to start like adopting Bitcoin in this fashion. So maybe there is time because there's a lot of, it's not something that, a major company can't just like wake up and say, oh yeah, we're going to buy this much Bitcoin. Like, you know, there's usually a lot more process to that. So hopefully that means there's some time. So yeah, I guess.
Time for me to get all my Bitcoin.
What'd you say?
Time for me to just get all my Bitcoin.
Yeah, you gotta always get yours, but you know, even if someone buys them faster than you can, you know, it's all about getting as much as you can. You know, you can't control what other people do. You can only control what you yourself do. And either way, it's still out of, like, it's a percentage of the whole. So, you know, it doesn't really matter that much, but it's always good to be accumulating. So I guess the other topic for today has been this really, like, it's been like I've seen some wild and crazy things in the crypto space, but this might be one of the craziest. It's this like, it's all being fueled by all this development that's been going on in Ethereum. And so, you know, you all have seen it because, you know, you've interacted with Hex, and Hex was really like, I mean, DeFi had been a concept for, you know, a couple years, starting around, like mainly it was centered around like just borrowing and lending. So like, you know, there's there's services like Nexo, which you know, you can post collateral and then borrow against it. But in that case, you're actually holding your collateral with Nexo, which is a company, and then they're issuing you a loan. And so that's not DeFi, because DeFi means decentralized finance. And so, you know, that's like kind of like more like traditional, like more traditional financial system. Whereas DeFi is where these financial products live entirely on the Ethereum blockchain. And where rather than having, like, you know, a company that like runs it, there are incentive structures for people to, you know, do the various things to make the system work. So for instance, in a DeFi product that's like centered around lending. So if, I think like it's what Dharma, I don't know if Dharma still is this, but yeah, so Dharma used to be it was a smart contract where you would send Ethereum to the contract as collateral, and then the contract would send you a stable coin, and then you would pay back your loan to the contract, and when you finish paying it back, the contract released your collateral back to you. And so in that case, like, you're not sending your money to a company, you're sending it to a contract. Because like when it's sent to the company, you know, they could lose it, they could get hacked, an employee could steal it, you know, all types of things could go wrong. But when you send it to a smart contract, it's like somebody stealing it isn't gonna happen to you. Like there are ways that people lose money in smart contracts, but it's usually from like a bug in the code that someone's able to exploit. And it's not like whoever's running it is stealing from you. So it's a little bit different there. And so these smart contracts, they're all centered around providing these incentives so people can do like the important things. So like, you know, in the lending, you know, you need borrowers and you need lenders. And so they have, so you need to attract lenders. So that means, you know, based on the interest rate that the borrowers are taking, that's going, you know, getting paid to the lender. And so like, you know, setting up like a smart contract to enable like collecting interest on a loan, like, you know, that would attract lenders. If there are lenders there, then there are borrowers, and the borrowers and the lenders, they set the interest rate based on, you know, what's available. And so that was like kind of how DeFi kind of started off, was like around borrowing and lending. And then it had a pretty big research, like kind of like the new wave of innovation was around these decentralized exchanges. So those are things like Uniswap. So there's Uniswap, all these different ones. And the way that these decentralized exchanges work is that they're a smart contract. So it's not like Coinbase where you're depositing your Bitcoin or Ethereum on Coinbase and then trading. In Uniswap, you connect your MetaMask wallet to these smart contracts, and the trading happens through a contract. So you're in control of your keys 100% of the time. So it's actually, like, just in general, a much safer way to trade, because you don't have to deposit your money on an exchange that could get hacked. And so this, just these exchanges having, become so big, and with things like Uniswap definitely leads the way. Let's see if we can find, so Uniswap is, a really, really, it's such an awesome concept where it's an exchange that it operates by not having buyers and sellers trade with each other, but where buyers and sellers trade with a liquidity pool. And so what you can do is if you have two assets that are trading here, so just for example, let's just look at the Hex one. So right now there is $2 million worth of liquidity. And so there's 2,949 ETH and 380 million Hex. And this ETH and the Hex are inside this liquidity pool, and the liquidity pool collects trades. And so this is our trading fees. And so this is a really big innovation in the crypto space, because it gives people the opportunity to make money as an exchange. So like when you trade on Coinbase takes a trading fee, because they're the ones who are providing liquidity. They have like the platform that people are trading on. So they created the liquidity, so they get to get the fee. But with these liquidity pools, you as an individual, like we can go, let's look at the smallest contributor, see if we can gather how much they have. Okay, so you can add negligible amounts of money to this liquidity pool. Less than $1, any size can participate. And so what DeFi really represents is that every role that a financial institution once served in the market, people with Ethereum addresses can now serve that role. So you can be someone who's borrowing, or you can be someone who's lending money to borrowers. Usually it's banks that lend money to people who are borrowing. But now you can interact with these smart contracts and you can be the lender. Or, on traditional exchanges, like in the stock market, there are people that are called market makers. And in that case, market makers are the liquidity providers. So market makers have special deals with the brokers, and they get a fee for providing liquidity. So that means that when you just look up a market maker, so this is it's where they're not trying to buy low and sell high. They're not trying to predict where the price is going. They're trading really small time frame trades, and they're doing that because they're being paid a trading fee for being a liquidity provider. So it's kind of like this, the same concept that exists in traditional markets, where usually it's someone at the firm who's trading on that strategy. So it's kind of like they're pretty much using bots that just like, as like price moves on like really small time frames, they're like placing buy and sell orders, and they're doing that because like they're the ones making the fees. And so, any activity that like a financial institution would do, you can now do. And so that's where I think that DeFi is really like a big, it has disruptive potential because there's so many benefits to financial systems where the customers are in complete control of their funds at all times, and where there's not like you're not paying a premium because your trading fee needs to fund a major financial institution. So like it overall leads to like just decrease in like the cost of conducting business in this fashion, because you don't have to factor in like, being able to fund like a big fancy building, with all these employees, to perform, to be like, like a counterparty in like, these financial contracts. Like all this is done on the chain, and so I think it's going to lead to like a lot of financial services that couldn't really exist in traditional markets because it just might not be feasible. But I think that like because it's just like a different risk profile in the DeFi space, I think there's going to be a lot of innovation around like different types of financial products, different types of insurance products, different index fund, like all types of stuff. We're going to see a lot of innovation in, and I think that's where going to be the source of a lot of really exciting opportunities, throughout this next crypto bull market. And so Hex really kind of introduced me to this world. But I think Hex is, Hex, I think like, the more I've learned about these different types of like DeFi cryptocurrencies, like the goal with like all of these DeFi systems is to earn yield. It's all about, where you have money and then you can compound it over time. That's like the primary goal. And what I think is going to really push the price of Hex up over the long run is that there's obviously a lot of demand for yield generating, cryptocurrencies, or like these systems that generate yield based on your crypto. But there's a lot of, and this is what we're going to talk about here in just a minute. Like because this stuff is like so new, and a lot of these things are like these like Rube Goldberg machine, like smart contracts, a lot can go wrong. And because
Rube Goldberg, that's funny. Why? That's funny.
Yeah, like that's kind of how some of these are. And like where, because it's all like all these smart contracts, like here, like we can look at the, Uniswap smart contract, like all of the, like all of these like Ethereum contracts, like it's just code. And so it's easy to produce, because you just like write the code and then launch it. But this stuff is so cutting edge that like sometimes best practices really haven't been established, and people, ship code that has bugs. Like it's hard to write code that doesn't have bugs. Some of the stuff's hard to test too, and so a lot can go wrong. And so there's a lot of risk. But I think what Hex will emerge as is one of the least risky ways of earning yield, which is funny because like Hex is, pretty high risk. It has other risks, like, like supply centralization is like one of the big risks in Hex. Like there's a couple wallets that have a massive amount of supply. And, so like that's a risk, and then there's like the general like exchange rate risk, where price can go up and down. There's not counterparty risk, which is good. And the yield, like it's like guaranteed. And so there's no like counterparty risk that you'll get delivery of your yield, Whereas with other like yield generating crypto products, sometimes you might not get your yield, or the transaction fee will be higher than your yield was. And so like different things like that will, there's probably going to be hysteria where like the fundamentals of these things don't really matter. But I think Hex is going to stand up pretty strong to some of these like Rube Goldberg machine things, because Hex is a lot simpler than how the yield is generated in a lot of these other things. And it doesn't, and the ability to produce yield does not rely on new investors coming in. And that's really, and what's really like interesting about that concept is that a lot of like kind of the Ethereum like DeFi establishment, so like just like the Ethereum people online, they actually like really hate Richard Hart and they really hate Hex. And there's been a lot of like gatekeeping. Like Hex is like up until recently it was like the #1 trading volume coin on Uniswap. It really like brought Uniswap out of obscurity. Like Hex was the first major use case of Uniswap. And it does all the things that people in DeFi want, which is like, generate yield, does like the staking, like all these things. But people just hate Hex because they thought it was like a Ponzi scam. But what's interesting is that a lot of these like DeFi products, the yield only lasts as long as there are new investors coming in, which is actually like pretty Ponzi scheme like, where like Ponzi schemes fail when the new investors stop coming in and they can't be making out the payments that they were claiming were investment returns, but were really just like new investors' money. So like, I think that there's going to be like at one point in time, I think there's, after some crazy hysteria, I think there's going to be a big crack of boom where the systems that emerge is being able to like produce risk-free yield. I think that Hex is going to emerge from that as a really strong form of like a really strong currency that could be kind of like a DeFi reserve currency, where maybe you could take out a loan where if you have Hex staked, or maybe like how we talk about posting Bitcoin as collateral and taking out a loan. With like DeFi, you can post other things as collateral. Maybe Hex might be like a great tool for using as collateral to extend a line of credit, where like the person who's lending it maybe gets the interest from that, and the person that's paying it maybe gets to pay a lower interest rate or something, because the remainder of the interest is guaranteed by the contract. So I think there's going to be a lot of innovation, and then with that comes just like crazy opportunities for in price. So like a couple of examples. So here, this is a site that we always look at, the uniswap.hex.vision. It's just like a random coin. I was literally just like browsing here. Like, I don't even know what this is. I think, or no, Ty and I looked it up today, actually. It's like a social media site that has this like coin involved. Just like randomly, like just, in the last couple days, it requires such little money to push the price up on these things. Like this thing's up like 1,000%. Like, and like, what is this? Like, it's so like the market's in this phase where things are just like going up. And I think Hema asked me about like this one. Was it Acro, Hema? Is she still in? I'll have to, but like, all these different coins that just trade on Uniswap, like because they're trading in this like DeFi environment, it like, anybody can just like buy. You don't need to set up an account to buy this. Like you can just buy it. And so like there's all these different coins that are listed on here. And I think that like, this is where like, the big opportunities are going to continue to be, like Hex was like the first one that really burst onto the scene. Another example is one called SNX, which has, gone up a lot. And
I wonder if you
so
looked
there's,
at every single coin listed on Uniswap right now and looked at the percent returns over the past month, say. I wonder what the average would be, and I bet it would be, insane.
oh yeah.
Even if it's volume weighted.
Mhm.
And I wonder if that means, DeFi bubble right now.
Yeah, I mean, it very well could. Let me find, there's a site where you can look at the Uniswap chart. Let me see if I can find it real quick. And then, because there's a site that aggregates all these in a little bit different way than, let's see. I think, one sec, let me try to find. There's a site that that you can, it just like compiles all of the Uniswap charts. Let me see if I can quickly find it. If not, we might not be able to. Just because I do want to see, kind of see some of these other. What is here? Let's see. Let me just Google it. Uniswap price. Let's see if. Okay, we'll just look on these, but I mean, a lot of these ones, like, each one has like its own, like, crazy DeFi, like, use case. Some of them are like the ones that are like, so, like ones like Lend. This one's like based around like borrowing and lending, and just like, that's pretty crazy. Like there, so like, Hex is just one of the one. Like Hex was the first one that had like a major push to the upside. But there's a lot of other opportunities on Uniswap, and what's interesting about like the whole DeFi movement is that there's this concept of yield farming, and what yield farming pretty much is where you are holding, you hold money as collateral, and then you borrow funds, and then you take those funds over to somewhere where you can lend them or stake them and earn interest, and then the amount that you're earning is greater than the amount that you're paying in interest. So like, people are like, what some of these coin, like Lend, a big part of Lend going up so much, Lend in particular was one of these like yield farming systems where you have to like buy the coin to like earn interest on it. And so people were borrowing money to buy the coins to earn interest, and like playing this like arbitrage across different like DeFi products where like you could get one interest rate here, you could borrow at one interest rate here, and then lend at another interest rate over there. And so, people, or like, you borrow at some interest rate and then you provide liquidity in this other system and you earn fees over there. So like, there's a couple of different ways that people do it, but that's generally the concept, is that you, like, yield farming traditionally is like where you're borrowing funds to then lend them out. So it's kind of like this circular, like, kind of like, I don't know how sustainable some of these things are going to be. But because it's like just starting, I think there's a lot more room to add to it before it like becomes unsustainable. And so that's kind of, I think that's even kind of taken some of the air out of Hex. Like when we look at the Hex chart, like we're right back down in the bottom of this range. I think that just like over this period of time, there was a lot of opportunity to be buying some of these like other DeFi products. And, and since like Hex had like its first like, 1,000% move up, people are looking for things before they have that first 1,000% move up. And like just during these months, the whole concept of yield farming was becoming really popular. Like there are all these articles about it. So these like what it really shows to me is that there's a lot of demand for earning yield on crypto. And so that's the, and so like the borrowing and lending and earning interest is one way. The like being a liquidity provider is another way. And then trading is the other way. And so like, trading is higher risk, but, like that's pretty much like, those are your options. And so DeFi is really kind of, creating these systems that people can, do these things. And because it's so new and there's so many unknowns and there's a lot of risk, the reward is also really good when it works out. So, there's just been some pretty crazy things that just pumped in price that, so there's Lend that we saw that was, pumping in price. YFI, I think, was another one. I mean, so this started at 2, now it's at like 14. And so the class of coin, so like we should talk about like the whole like borrowing and lending and like liquidity providing yield at one point in time, but at another time. But because the type of coin that is really kind of caught my interest is they're called rebase coins. And so one example is, it's called Ample. And so what Ample is it's a stable coin that is meant to be pegged to the dollar. And rather than keeping the peg to the dollar through like having a company that runs the stable coin who has a bank account that they keep a 1-to-1 backing of all of the issued stable coin to, where one stable coin equals $1 in their bank account. Like that's what Tether does. That's what USDC does. And so, and that can cause problems, like if their bank account got shut down or if just something happened, they could lose the 1-to-1 backing. So like the whole concept of stable coins is, it's a tough problem to solve already. Cause like, like prices don't want to stay stable. Like prices go to where they like think like the price should be. Like if, price factors in risk, it factors in circumstance, and it, like the price emerges as like where the supply and the demand meet. And so pegging a cryptocurrency to like something in like the physical world or to something that's outside of like the crypto world, that's a really difficult task. And so things like Ample, and then this new one that just launched that I bought some of called Yam, rather than setting the peg by keeping a bank account that they keep backed, where like one Ample equals $1 in their bank account, as the price of these things go up. So here we'll look at Amples because it has a couple of weeks of activity. When the price of Ample goes up, the supply of Ample gets multiplied. And so this is actually like crazy to wrap your mind around, because
show the Ample Fourth dashboard.
So here's the supply. So we'll look at percentage, and we'll look at 90 days. So as the price goes up, the way it corrects for that is it increases the supply, because that, more supply, then people will start selling and the price will go down. And so, for the first couple of weeks, you're just kind of hanging around zero because price was pretty close to the target. Price was in the target range for a while. So there's really not much, so the supply isn't changing. But when people started buying it, the price was going up. And then as the price was going up, the supply was increasing. So you see here, price started going up, and then, so let's look at on the 28th. So price had gone to like 128. And then, so in response to that, the ample supply suddenly increased by 2.69%. So everybody suddenly had 2.69% more ample in their wallet. Like it literally shows up in your MetaMask. Like one day you had 10, and then when it's called a rebase, when this like supply scaling happens, you now have, 12.695 ample. And so since the supply increased, and here like price continued to go up, like when the price like moved up, that rebase didn't bring it down. What the market saw that as is the price went up and my balance went up. So now in people's heads, they're like, okay, I spent $100 on, and I got 100 ample. Now my amples are all worth 120, and now I have 2% more of them. And so like the 20% gain in price is amplified by the 2% gain in their balance. And so people just, in their wallet, they see the dollar value go up so much, and that they're not selling, they're buying more. And so people kept buying up the price of ample. And then, so like the price continued to go up. And so in response to the increasing price, the supply increases at an even greater rate. So as people were FOMO buying into ample, pushing the price up, they were amplifying their balance because, at this point in time, ample was increasing at a 15% rate. And so, what day was that? Looks like in between the 28th and the 5th. So like on this day, price was at 250, and your amount was increasing by 15%. So that like when price is going up, it's like really going up because you're getting more of it. But, so that's like great when price is going up, but it also works the same in the opposite direction, where you have the, so it's because it's the rebase is positive when price is high and it needs to, and the goal is to make price go down. But when price goes down below the target, the way that it corrects for that is it decreases supply. So say, you saw this like craziness in the market, the price went up a lot, the supply went up a lot. Now the price has gone down below the target rate. But say, price hit $1, you're like, okay, I'm going to buy in here. So you buy $100 of ample at $1 each. If now price goes down, so here, the lowest that price got to was 65 cents. And so to correct for the price of ample having gone down, so now your 100 ample that you bought is worth 65 cents. And on top of that, the amount that's in your wallet gets decreased by negative 3.5%. So just how the supply increases to bring the price down, the supply decreases to bring the price up. And so if you're holding ample when the price is going down negative, or when the price is going below 1, and you're holding through these negative rebases, your balance is going down and the dollar value is going down at the same time. And so it makes your losses look much bigger. So what's interesting about these coins is that like they're kind of early on have been categorized into the group of stable coins, but in reality, these types of coins that adjust the supply based on the price, they are more like volatility coins, where like because there's this like feedback loop where as price is going up, you want to buy more because like your amount gets multiplied. So it's like, it like pushes the price up to the point where it's like not just like where the buyers run out of energy, and then the effect of like the decreasing supply starts to take over, and then like people start having losses. So like it like amplifies the gains and it amplifies the losses. So it's not really stable. It's actually like extra volatile, but extra volatile around like the $1 range. So
Brian, what can you like? Why? What are they trying to solve with that? Like, what is that? Like, what is that? What's the purpose of that? Of getting more when it goes up and losing it when it goes down? Like, why is that built into Ample?
it's built into Ample to keep the peg with the dollar. So like, and the reason that stable coins are useful is because they're useful in issuing loans, because the value of the thing that you borrow, it's like having your collateral go up in price a lot is good for it's good for the borrower and good for the lender. But having like the price of the thing that is lent out change a lot is hard for the lender. And so stable coins are like useful in lending applications. And so that's why it's like desired to have something that like hugs around $1. And what Ample tries to solve with that changing supply is that Ample isn't a company that holds dollars on reserve to keep the peg. And Ample isn't like, because the way that like Tether works is when, let's see. So like Tether, for instance, let's see if we can find the real Tether. Let's try to find the Tether printer. Oh, it looks like it got suspended. So there's this account that like tracks, so like Tether issuance. So so like this is literally Tether, in order to keep the peg, Tether has to keep a balance of, so they have 12 billion Tether, 40 million euros, 23 million, is that Chinese yuan? 48,000 gold. Literally have gold. So like they have to keep this like these funds on reserve, and so that it's like a really difficult problem as like a business, and so that's like the point of the Ample fluctuating supply, is that you can like reach the target rate without without the without having to have like a bank account that's like one-to-one backed with dollars. But what you give up in that is that you sacrifice, like the trade-off you make is that like price spends more time outside of the target range than inside the target range. But if like, we've only seen, I guess like it's kind of in like this first little cycle before it really was doing anything, but like we probably need to see if, so that first like phase of Ample where it was all positive rebase was about 32 days. I think we need to see another 32 days of, price kind of being down here. And then maybe overall it'll average out to being close to this target. And maybe that's the goal. But it's a pretty interesting concept. A lot of people got wrecked, like buying here So, where you buy 100 ample at $3 each. So you spend $300, and then now, then price goes down to 60 cents. So now your 300 ample, or your 100 ample that was worth $300 is now worth $65. So 300 over 65, you're down like 80%. And then on top of that, your ample itself is getting cut at like 2%. So say you're down, so you start at 65 over 300, that's 21%. And then now say your 65 is now multiplied by, say it's like a 2% rebase. Now you're at like 98% of 65. And so it's even lower. And so it's just like, if you buy high and then you start getting a negative rebase, your losses can be pretty big. And so, there's a lot of risk in this. And there's even risk.
You bought some of this early. You brought some of this, last week?
Yeah, so I bought some of this last week.
I did too. I actually got some, I think, on the 3rd or the 2nd.
The 3rd, let's see what day that was. I hope it was when it was low. Okay, yeah, so you actually bought on a really good day. If you bought on the 3rd.
Yeah, I did.
I mean, yeah, so it's like price is pretty close to that. You might have lost a little bit of ample. But if price starts to go back up into this range, your ample is going to go up in value, and then the number of ample that you'll have is going to increase. So maybe that'll happen, but who knows? Like price could. I think when Ty and I were talking about this the other day, I think that this type of activity that's happening up here, like I think something similar to that needs to happen. Like that's probably going to be, like that same type of like market activity. I think it's just going to happen down here. So like, something. How many peaks and valleys is that? Like 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4. Say we. So 1, 2. That was 1, 2, 3, 4, 5, 6, 7. 8. Like maybe the price needs to do something like this before it takes off back up there.
Interesting. Wow, what a cool graph. Wow.
Like because like this was happening because people were FOMO buying in because they're seeing everybody's ample balance increasing while the price is increasing. So people are FOMO buying in, the price is going up, and as the price goes up, it makes the multiplication of the balances higher. And so it's kind of like a compounding effect that pushes the price and the value up. But it does the same thing in the negative direction, where down here, people are selling because their balance is getting cut from the debase. People call it debase. Their balance is going down, the price is going down, so they're selling, and the act of them selling is pushing the price down even more. And so, like that same thing where people are FOMO buying up here because people's balances are getting multiplied. People are panic selling down here because people's balances are getting divided. So that cycle until like the tides just kind of turn, and then all the people who were buying the low price ample, because like the way I think about this is that like the people buying down here, like if you bought if you bought ample down here, okay, let's go back to this chart actually. Like on this day, like if you bought ample down at this low price, like you're still getting a negative rebase. So you're losing money, but so you're losing ample, but then while you're losing the ample, the price per ample is going up. And in this case, like, you know, the price, when we just look at this one, like in this single candle, price went up 45%. So if you bought down here and then, you know, price went up 45%, but then your ample that you bought with is only decreasing at like 2 or 3%, you know, like right here, like 2%, then you're in profit. And so as the people who are buyers of ample down here are buying, and then all the people who are, you know, maybe had bought ample up here, hoping for the positive rebase, the rebase went negative. As soon as all the people who had bought up here have sold down here, you know, however many of these cycles that'll take, and as soon as all the people who are like buying down here, like, you know, do end up buying, then that's probably when the price will, you know, probably turn. So maybe that's what this whole, like, you know, ample thing might look like moving forward, is going to be, you know, something like, let's see how we can do this. Can you all see the, how can I move it? You know, like maybe ample ends up doing something like, you know, I don't even know what, like, you know, maybe it follows some type of like pattern like this, where, you know, price spends some time above and it's getting positive rebase. That's kind of creating that like self, you know, fulfilling thing. And then once those buyers run out of energy and, you know, people start taking profit from all the rebates that they got, then they, you know, start moving in here. So literally, like, this could be what these are, you know, not stable coins, but volatility coins. But the volatility happens in, you know, within ranges that are like maybe like predictable, or maybe within some boundary. And so ample is just one example. I don't know the equation that makes ample, like that the ample rebase runs on. But literally just yesterday, another one of these rebase coins was launched, and it was called Yam. It was actually this crazy situation. Like, this was actually one of the craziest things I've ever seen in crypto. Just because like ample, like, was such a,
Yam, like YAM.
Yeah, Yam. So here, I'm gonna save this, just because I like this chart. We'll save that for the archives. Yeah, there's Yam. And so Yam is brand new. It just started. Now this is crazy because Ample's rebase, it's not necessarily very aggressive. Whereas the Yam rebase is really aggressive. So like at any point in time, well, and also, I mean, maybe that's because like I'm still trying to figure this out. Because I mean, literally, this thing literally launched how many days ago? We just started the third day, so this thing's 2 days old. And you know, so it's still kind of yet to be seen what's going to happen. But today was like the first major rebase, because price went so high. Like the target rate is $1, but the price was at like $200. And so when this happened, the way, like, I think that the equation is, let me look it up in the let's see if I can find rebase equation. I saw someone, let me see if I can find the equation. Okay, so pretty much what it does with the like the rebase is it is, let's see, I'm doing this off the top of my head, so it may not be fully accurate. Let's see. It's current price. So the amount that you get is the current price divided by the target, or so not the target price, but the difference between the, like, so pretty much it's trying to get to, it's trying to move 90% of the way to the target price. So see how it's settled around 10? The supply increased by 10, by 10x, because the price was around 100, and it was trying to get to 90% of the way between 100 and 1. And so, like, because and then so on the next rebase, price is gonna, like, it's not gonna be a 10x boost. It's gonna be probably something like a like, you know, because it's trying to get 90% of the way here. And so it's not going to be like, you know, because the difference between moving from 10 to 1 is a lot smaller than the difference between moving from 100 to 10. So this next rebase is going to be a little bit smaller, but it'll get bigger if people start to, like, FOMO in and then push the price up. So see if we can find the Yam rebase equation. Yam. And what's so crazy, and like and also with there's so many unknowns, there's so many risks, that I'm not really, like, with Yam and even Ample too, I'm not really betting on the fundamentals on these. I'm really just betting on, like, the herd hysteria, because, like, people are going crazy with this stuff. Like, everybody, like, this rebase thing, like, it was actually a pretty surreal feeling. So, like, just for instance, you know, like, you know, the amount of Ample that I had went up by 10x, and the price of where I bought it at versus where the price of it is now, like, I've had gains, because even though the price went down 90%, my balance went up by 10x, and the price didn't really go down by 90%, like, from where I bought. So from my perspective, I bought around $100. And so, you know, the price is down 86%. So that difference, so, like, my Yam position is positive now, because I gained a 10x rebase, but it didn't go down, you know, that same, like, you know, 90%. Like, you know, it's close, you know, so it worked, like, as intended, but because, you know, I had bought at a lower price than what the rebase was based on, that difference is my gain, because my supply increased at a greater rate than the total supply. Or my, like, the value of my, like, you know, so my balance times the price went up faster than the you know, this price decrease brought it down. So this was the first rebase. And then today, what's crazy, like, with Yam, it was actually, like, a crazy thing to watch unfold. Let's just go to twitter.com. let's see if we can just look at, let's search here. Yeah. So Yam, like on their site, they like remind you that this is experimental. Today, there was a bug that they found that could have locked up part of how Yam works. Like, this is so funny. Like, today, literally, it was like the funniest thing to unfold, because like last night, like if we just look at all of these, like all these tweets about Yam, starting from about yesterday. Let's see if we can, like, last night, everyone I saw one person start tweeting about Yam, and then I just looked it up, and because I was looking for like kind of like, you know, a DeFi thing that hasn't already been pumped yet. And so Yam like kind of fit that criteria. And what's so crazy is that like last night, like I bought some Yam, then I saw every big like Twitter account talking about Yam. And then Yam ended up, like, the way that Yam works is they have these farms. And so you can deposit any of these different cryptos. Like there's Maker, there's SNX, Lend, Link, Comp, even the Ample, like all these different coins you can stake here and then earn Yam for staking it. I actually have some in, let's take a look at this. In this link, I have some Link staked in here that, you know, that I'm earning Yam on. This is yield farming, but in this case, I didn't borrow the Link to earn this yield. Like I just bought the Link. So there's all the, like, you know, this is like, you know, part of Yam's product is like you can like stake these things. You're really providing liquidity. You're like, and then you're able to earn Yam. So like there's all this like kind of hysteria around Yam. They got something like $500 million of like assets in here. So like when we look at, see if we can find like older, I don't even know where. Trying to find like older ones, but like, you know, all these people were like, you know, buying Yam, and that was what was pushing the price up. And then it was so funny, like Yam, like on their site, like when you first land on it, it pretty much said like, and on their like their Twitter, they like continue to reiterate that it's like here, let's go back like way before to see. I'm showing you how Yam was, you know, like how they were like describing it. So they launched with just like, so August 3rd was when the Yam thing, Twitter went live, tweeted with a Yam, you know, people posting Yams, Yam, all this stuff. Soon it launched. Okay, so on August 11th, so yesterday, they tweet, we are serious about this being an experiment and the code being unaudited. Please exercise some caution. They tweeted this because there was millions of dollars of, let's see if we can find the, like, over like, you know, 21 hours ago, over $300 million of crypto assets were locked in these farms. Like people were yield farming with $300 million worth of funds.
Wait, what do you mean lost? Just because it went down?
It's just an experiment, guys.
So like Yam, like they just reiterate like that they like built this. It's not audited, and like things could like use at your own risk. Pretty much is what they're saying. Like it's brand new. And people put a lot of money into it, just like purely on the meme of like Yams. Like Yam, just like easy to say, kind of sounds like Ample. And Ample just had, like, because people made a ton of money on Ample, like during that whole rebase thing. So, you know, so like people were just kind of looking for like the next version of that. And Yam just kind of like literally like last night kind of popped up as this thing. And so, you know, but today, what's so funny, like literally like last night, I'm like watching this unfold. You know, Yam's like going up in price, you know, people are going crazy, like saying like, oh, the rebase is going to be like 10x, you know, because the price was so high, you know, like the price was at like $100 and price wants to be at $1. So the, you know, the like the rebase was going to be really high. And I think people were expecting the rebase to be really high and then price not to move. But what ended up happening was the price did move. Like the rebase was so high that it really moved the price down. Like when Ample was like increasing the supply, people were just continuing to hold it. But maybe because this was so big, it was quickly sold down to kind of be closer to the peg, like the target peg rate. But like today, Yam figured out that there was a bug in not in like the rebase part of the code, but there's this like other part of the system that it's related to governance. So Yam is like the combination of Ample and some other coin that I forgot what it was, I think YFI, and where they took Ample's supply, like they took Ample's monetary policy, but they took the governance model of this other coin, and the governance model sets how like Yam operates this liquidity pool. So there's Yam and then there's YCRV. So Curve is this other like decentralized smart contract exchange platform for stablecoins. And so Yam like has this like other thing that's like involved in this, which I don't understand at this point. But apparently there was a bug that was going to cause a lot of the money that was going to, you know, somehow be given to Yam holders through like this like liquidity pool thing. They accidentally printed too many Yam, but not in a wallet that anyone can access. And the wallet disrupts the voting. And so the governance system where like people with Yam could vote on like, you know, how that like Yam liquidity pool was going to operate. It would be impossible to do votes because there's like pretty much like a blank address that has like a massive majority of the total supply. And so like literally like just a bug in their unaudited code that's like related to this like other part of the system that it doesn't have anything to do with the rebases. It mainly has to do with this like Yam YCRV liquidity pool. So this one, like this, they call it eternal lands. This is like it's a liquidity pool for Yam. Let's see if we can find it. Yeah. So like, I don't know. I don't know if this one in particular is it, but like this bug in their code was going to interrupt with this. So not like the rebase thing, which is kind of what drew me to it, but there's this other thing that like people were hoping to like earn yield on that might not work because there's a bug in their code. And the only way to solve it would be for people to use the governance model, like this like system of voting where if you have Yam, you can like cast votes on certain things. You would have to vote on a change that they could implement that would fix the problem. And then like, or else unless this like next rebase happens before this problem is fixed, that whole like extra part of Yam that like makes it not just like ample is not going to work. Like literally it'll be frozen. Like and like a lot of money might get locked up. So it's actually this like crazy thing that's unfolding as we speak, where Yam had a bug. It didn't break like the rebase portion, but the this other part of the system will be broken, and so they literally like in order and cast votes to allow the like this governance system to update something in here that will apparently fix the problem. Like I don't even know, like it's, you know, like I don't even really know what is wrong with it, but they need people to use their Yam that they have to vote. Pretty much people need to vote to save the protocol. And it's so funny because like just last night there was all this hysteria around Yam, and then there's some issue, and now it's literally up to the community to cast votes. They need 160,000 votes delegated, which comes out to 1.5 million Yam.
Wow,
Wait,
that seems unfortunate for them. Like, very sort of interesting.
It's like, you know, and it has to happen an hour, but like it's literally like there's a countdown, and it's so funny because like one, it's just like this just literally like I started this last night at like midnight. Like, you know, I saw Yam, you know, I wanted to ride the like rebase pump, and then this issue, you know, appears that where I don't even know if it's really the worst thing, because the thing that it shuts off, I think has nothing to do with Yam at all. Like it more has to do with like this particular yield farm on Yam, but like the Yam rebase will work the same. So like on one hand, it cuts off your, you know, like one way to earn yield in Yam. But like the whole rebase thing is, I think, really the interesting part of it. And
so you're saying you can no longer access the eternal lands.
yeah, like that's from as far as I understand, this is the only thing that would stop. Like, because like, I think this is the thing that's at risk. And so like, you know, and so like so what they need to do is they need people to send, like, you're not like, you keep your Yam, you just delegate your votes. So like by holding Yam, you get votes in this governance system that like operates that liquidity pool. You know, like this liquidity pool, it's operated by, it's called a DAO, a decentralized autonomous organization. And you use it by like voting with like the crypto. And so they need to get 100,000 more votes in or else.
How optimistic are you?
I don't know. This is like, so I have no idea. I'm so intrigued by how this is going to play out, and I don't have enough money in it to where it like is going to hurt me. I don't like, this is very tiny peanuts of, you know, just, you know, this like risk money, part to like, you know, understand this, part take the risk on like the rebase thing, you know. So I'm not worried. I would be worried if I had a lot of money in here. But so I don't know, but on the other hand, like maybe getting rid, like pretty much what I think it'll do is it'll just like lock up this governance model. And like, maybe that's not the worst thing. So I don't know. I'm still waiting to see. Let's see if we can, let's do a little digging here. Let's find the Yam contract. Let's see if we can get any information about this on Etherscan. Okay, so let's see. Creator address. Okay, let's see. This is the creator address. Where's the Yam itself? Not the Yam contract. I want Yam. Yeah, okay. So that is so funny. 7,200 addresses. Let's look at the holders. I think I saw something that like everyone's appears as 0. Yeah, because what happened was that they minted a whole bunch of Yam and deposited it in, accidentally made it go in this wallet. Something stupid like that. And so I don't know, like this is gonna be one of the craziest things to watch play out here is what happens in the Yam. Here, let's look at I'm gonna pull up the Yam Telegram so I can maybe see what's going on. People in here are talking about to delegate. But the thing here's part of why I haven't delegated. One, like, I don't know if I really care to save it. I don't know how big of a difference mine is going to make. When you go to delegate, look at the gas fee to do this. $32. Like, because the gas fees are so high right now, because just all the DeFi craziness.
This farm might experience a drought.
Yikes, $32. Wow.
Yeah, and so I don't know what's gonna happen. I think that Yam, so what's crazy is that Yam may, like kind of what they were trying to do with Yam may fail, but even if that happens, Yam will still continue to exist. Like it like can't be like shut down. Like it'll still just like operate, but and maybe something will be interfered, like with the rebase will be interfered with, because they announced this bug and then the first rebase worked, but I think that first rebase is what broke it. So Yam may continue to operate, or like as a smart contract, and if it pretty much has the same like Ample, because like the Yam rebase is pretty much a carbon copy of Ample. So if if Ample, or if Yam follows that same type of like market structure where it spends time above with positive rebase and spends time below with negative rebase, we might see that just play out on the Yam chart as well, where this is just like the first day of it, but where maybe Yam spends some time above, and then it'll spend some time below the target. Just kind of oscillating between these two areas, and it might be like a crazy meme in this whole experience. Like this whole, it literally came out of nowhere, drew in a ton of money, had a bug that like still no one's really that clear if it's gonna like really destroy it. So like, yeah, so here's where they're saying what they have to do to fix it. Set rebase to 0. This will pause the rebases to allow them to implement the full fix. Reset YAM in YAM reserves to 0. This will eliminate the overinflated YAM in the YAM reserves. So pretty much they're, I think this is the YAM reserves. They overinflated this address. Like this has 32, okay, how many zeros? 3, 6, 9, 12, 15, 18, 21, 24. Okay, so 369 billion. 369 billion. So like 32 million billion billions. It like they overinflated to like their own reserve. And so this is just going to fuck up the, it's going to fuck something up with whatever that YAM reserves thing, whatever role that plays in all this. It'll just mess everything up. So they need people to, they need to reach 35,000 YAM delegated to this deployer address. And so they need 35,000 to approve this, like submitting this proposal. And then they need 140,000 to approve it. And so like they need all the YAM holders to come in here and delegate their YAM. So what you're pretty much doing is like, you don't, like your YAM you don't need to vote on your YAM. Like you can delegate your YAM votes to another YAM address. So like I could just delegate my YAM here to this. But I don't know if I want to pay $32 to save, what, like, that's some interesting game theory. Do you, pay $32, so, that's almost like, I don't know, like maybe 6 or 8% of all that I have, in YAM. Like, do I take that 6% loss to try to contribute to YAM and save YAM? Or do we just think, do we think that like, the YAM whales are going to come in and save this? Right? Like, so
The yam whale.
these YAM whales. So yeah, I'm really excited I'm going to be watching the clock and seeing how this plays out, because I think if this rebase happens before this, I think it'll be impossible to stop. So we will see. And then the question is like say if YAML fails, what's going to happen to price? Like price could pump for some weird reason, like that, no one understands. Price could pump if like part of YAM fails, or it could go to 0. And, so like this whole concept of these like rebase coins, they're really exciting, but they're also really risky. And so that's why, like, unless you have like a strategy in place for like managing that risk, I usually wouldn't recommend people to be like really experimenting in these things, like unless you're like really know what you're doing, because like you don't want to risk your last $1,000 of Bitcoin on something like this. Like you only want to be investing in things like this if you have other Bitcoin that you can fall back on as collateral, so that if this trade doesn't go your way, you can use your existing collateral in order to spread that loss over a longer period of time. But it still is like really cool to like start, experimenting with and seeing how these dynamics are going to play out with like the supply, like how in Bitcoin, what we really like about the supply is that it's fixed. Oh, okay. I see. Wow. Okay. This number is going up pretty fast. I think we're going to get it. I think YAM's going to be saved. But like, so, Bitcoin supply, that's fixed, and we really like that. And that's what makes Bitcoin useful as like a reserve asset, and is like, like a hedge against inflation. Kind of how we were talking about earlier with this company who was buying it as an inflation hedge. Like that fixed supply is important in things like Bitcoin, where like, the purpose is to be like a reserve asset. So that like fixed supply makes a lot of sense. But then like, with Hex, like Hex has it's not a fixed supply, it's a constantly inflating supply where the supply inflates at a constant known rate. And then the inflation is paid to people who are providing price support. You're exchanging your ability to sell at any time for the right to collect on a larger proportion of the inflation pool that comes out of Hex. So like, in Hex, like, the slightly increasing supply is useful in that setting where you can have the contract guarantee that it pays yield, because the yield that it pays doesn't come from previous investors. It comes from, the just like, newly inflated supply. And so in that use case, that supply is important. And then with these things like Ample and then Yam, which hopefully, maybe we'll see Yam play out. With these, like the supply can oscillate pretty wildly. Mainly on Ample, we've seen it be positive, where it's above zero. It's had more days of above zero rebase than below zero. And so you can see that, like the supply has only grown and then now it's starting to go down. Now like, there's this like whole other concept of these oscillating supply coins, where, you can call them stable coins. Why don't we coin this here? These aren't stable coins, they're volatility coins. Those have their own purpose in the market. So, and the market appears to be demanding them, where people would be, pushing the price of a coin that's meant to be $1, pushing that up to $100. Like, people must demand this. And so, because these are new, there's higher risk. And they require a lot more strategy than, like with Hex, it's easy, you just buy it and you lock it and then you don't think about it for years. Bitcoin, you buy it and then when price goes down, you use it to borrow against it and then you buy more, so like, it's a, kind of like a limited activity. You still have to take some action, but don't really have to do much. But in things like this, it's like very active. Like, if you have a lot of Yam when it's high in price, you want to be selling into those rebases. Like when you get your rebase, you want to sell some of it so that you have money, so that you can buy up when price is low and the rebase is negative. You want to be buying towards the bottom so that increases in price from where it's at to like where the target rate is going to be greater than the amount that the percentage that you lose during the time that of negative rebase where your balance is decreasing. So there's a lot more strategy involved in this. So Hex is really easy to just like hop into and start doing, but this one takes a little more research, a little more practice, and just knowing how to properly operate, like with Uniswap and being able to, or with MetaMask and being able to like set the gas and all these other things. So this one's a little bit more difficult to navigate, but that's also kind of where some of the opportunity lies. But with Yam, it's yet to be seen what's going to happen. Ample has its own risks. Like Ample has like these admin keys that like can apparently interfere with something. So, so all these have like these trade-offs. And maybe we'll see one of these, like a truly risk-free volatility coin. I think that could be pretty interesting. Cause, the Yam, it's like, we saw right here, there's, like the software bug risk, like maybe that, I don't know what's going to happen with that. It could break Yam completely, or it could be a non-issue, or it could be fixed using their solution. And if it is fixed, like if the Yam holders put together enough votes and they're able to fix the protocol, that could be super bullish for the price. Because one, like what that means is that like it has a community of people who have a vested interest in this working, who are willing to pay, you know, what did we say that delegate that fee to save was earlier today when I was looking at it, it was like $6. Now it's like $33. You know, like that would like prove that there's like, you know, like some community power there. There's some meme power there, you know, like it's a great day to save Yam, you know, and that could be really bullish for the price. So since I'm not really trying to accumulate a lot more Yam right now, I want the price to go up because I probably want to be selling Yam before I buy more Yam. So I'm actually hoping for this to get saved. I don't know if I'm going to delegate my votes, but I'm actually hoping it gets saved and that causes a crazy price pump because people will be like, oh, the rebase is back on. And then that combined with people like, oh, they just saved this. There must be something here. Between all those things, I think people could be pushing the price up a lot higher. And then, you know, because I had already gone through one positive rebase where my balance increased by 10x, if that can happen again, yes, please. Like, you know, like now my, you know, my balance will be up in total 100x from when I started. And if price continues to stay above the $1 target, then, you know, that could turn into a pretty sizable return on investment. So I'm hoping for this to get saved. I'm not too worried if it doesn't, because it's like not that much money at all. And you know, and this is like, you know, this is why it's important to have like a big like Bitcoin like collateral position, because then you can like afford to like take risk on like very high risk things that could, you know, randomly just like pop off and be like the next big thing, you know, kind of like what Hex was, you know, like Hex was super risky at the start. And, you know, I was able to, you know, I wish I would have put more into it, but, you know, I was very conservative with how, you know, money I put into Hex. I was probably like, wasn't conservative enough. I probably put more than I otherwise would have. But since I've been following Hex for like over a year at that point, I was like already into it. So whereas Yam, like literally just came across me yesterday. You know, so you can't put too much money in this because there's, you know, you don't, the worst thing you do is lose money. But, you know, just like being able to have a, like, you know, like that's why like for most people, like before you can really get into some of these like deep in the weeds things, like, you know, most people are better off just building up a Bitcoin position, you know, add ETH, add some Hex, you know, kind of like these ones that like are just good to hold anyways. And then when you have some of that, like just as like your backup, you can then start taking risk on some of these riskier things, which are still a lot of fun too. So, so it's definitely a crazy world. Like this is the Wild West, and you know, these things are unfolding as we speak. Like this is all happening right now. Never happened before.
It's fascinating to have you as a narrator through it. I'll say, Brian, very cool.
Yeah, I mean, it is pretty crazy. Like
we go on quite the adventures. We've been whale hunting with you, and we've been to the farm so far, and they've both had like imminent like it's really interesting.
Yeah, I feel like every time we get on, there's something going on, and that just kind of speaks to the nature of the whole industry itself. Like, you know, there's always something happening, and what that means, there's always opportunity, right? Like, you know, people like sometimes feel like they're too late to get in, but it's like really never too late. Like there's always opportunity. Like there's always something going on that can give you a good price to buy something at. And so like it's really, you know, it's just good to be aware and like, you know, be able to like have the skill, like, you know, so you all like, I think could navigate this, you know, but for, you know, people who haven't, you know, gone through the Hex process, you know, haven't, you know, learned how to, you know, do a trade on Uniswap, haven't learned how to enter a smart contract, you know, by like staking their Hex, you know, like you need to kind of have those practice reps in before you're able to like confidently navigate some of these things. Cause like you look on here, like literally there's no instructions. Like there's no information about what's even going on. Like there's literally nothing. So you kind of have to like already be familiar with this stuff. And it's pretty funny. It's causing people to like lose their minds. I saw this funny picture here. I'm gonna send it into. Let me see if I can airdrop it to myself. I can share this. This is actually really hilarious. I'm gonna. Okay, let's see. So there's this funny picture. Okay, desktop one share. Yeah. So I think this perfectly captures like the sentiment of what's going on in DeFi. There's like the people who are making the most money are mega like galaxy brain people, and then like the dumbest people you could think of, like people who just like buying in on FOMO, like all this stuff. And then there's always this like group of you know average IQ people who are like just way overthink it. Like you know you have to have like no, you have to have complex reasons for what you're doing. What is the point? What is your goal? You know, and then if it's good, I do it. If it's good, I do it. Like, and that's kind of like you know how these things are playing out. Like where they're like it happens so fast, and these things just like burst onto the scene where you like you don't even have time to like really gather information, and then also like who are you going to gather information from? Like it's brand new, so like you know you either have to like already kind of have a mental framework to like start unpacking these things, or you just need to like blindly take action. So like, you know, these people are probably like on the right side of this. Like these are the people who are like, you know, really tuned in, really like understand these things, understand like how the money flows in these markets, you know, understand how these contracts work, you know, and like they're the ones making a lot. And then there's other people who are just like buying in just because like literally like browsing around, you know, look at the, you know, just like typing in random letters, you know, find something that you, so bonk, you know, I buy bonk right now, you know, just look at here, you know, these people just click there, you know, they look at this, then they click trade, and then they go in here and you know, buy some bonk. Like that's what, you know, that's what these people do. Like no research, you know, no effort, but like in environments like this where there's so many things are unknown, and then the like there's so much unknown and it's starting from zero. So like, you know, going up 100% from a really small number is like nothing at all. So just like, you know, kind of like the law of small numbers comes into play, where it just doesn't take much money at all to push the prices up on these things. Like, you know, just craziness can happen. And sometimes the best strategy is to just kind of like blindly buy, but just buy in with like an amount that you're like okay with like losing. You know, like for larger amounts, like, you know, like for the amounts, you know, that we've allocated like Bitcoin and Hex, like, you know, that's like with a lot of like fundamental analysis, you know, like understanding the dynamics of the supply, understanding the dynamics of the inflation. And that's like very calculated. But like in this environment of like, you know, charts that look like this, like sometimes it's just better just to buy and ask questions later, especially when it's like not too late. Like, you know, I mean, this one's been going up a lot for a long period of time, but kind of this whole like DeFi, like farming thing, this is really like over the past like month or so. So like, this isn't like a mainstream thing yet. And people are just now starting to figure it out. So I think there's probably like, just for all these like DeFi coins, there's probably going to be like another wave of like big moves to the upside, where, you know, things just like continue to heat up, and as more and more people get in, more people like have some experience with these contracts, it really doesn't take much analysis to really, it's really about like just taking action. And and a good strategy around a lot of these things, like I'm literally just like looking at like random coins right now, but just like buying into dips. It's like you look at like the lend chart. If you can be catching these dips, you're going to be doing well. Same with like what's another one that really has gone crazy? Was Wi-Fi one. Yeah, I mean, kind of, these dips right here, like buying dips in like crazy uptrends is always a good strategy. And so, yeah, I mean, that's kind of what like this, this like emerging space that's unfolding is, where you can imagine like any type of like financial contract that happens in the real world can now happen through these smart contracts. Like during the first couple of years that starts to unfold, because of all the unknowns and all the risk, there's gonna be a lot of reward hidden in there. And so I think there's gonna be a lot of life-changing opportunities on the horizon in this space. So I would definitely keep an eye on these things. And really it's really just kind of following along in the Ethereum community. The Bitcoin people actually hate this. Like a lot of Bitcoin people are like super salty because like they're not having these sick. I mean, Bitcoin is doing great, but they're not having like 1,000% gains overnight. Like they're kind of stuck in their own world. Like even right now, like there's been some, like you might have seen it on Twitter. So like this guy who's like pretty prominent in the Bitcoin community, he like posed the question of like, what is the Ethereum supply? And
I was listening to, was it this Pierre? Is he the one who asked it?
Yeah.
I started listening to him on a podcast today. I didn't get that far in, but
yeah,
I didn't know it was this guy.
Yeah, he's great. I really like some of the podcasts that he's done. And he actually like posed the question of like, what's the ETH supply? And then someone was like, just check Etherscan. And then it kind of kicked off this whole discussion where like part of like Bitcoin culture, because it's like in Bitcoin, the supply is pretty much the most important characteristic. And being able to validate being like having the ability for everybody or like as many people as possible to independently validate that the supply is what it should be at all times. That's like a really important part of maintaining that supply cap, is having it be auditable. Because if nobody could calculate what the supply was, then like how do you know that you have a fixed supply? And so Bitcoin people really care about that. So like you might hear about like Trace Mayer always talks about running a full Bitcoin node. So that means downloading the entire Bitcoin blockchain and then having it be listening for the like other nodes on the network to propagate transactions, and then for you to propagate the state of the network to other nodes. So it's like just holding Bitcoin, you're not really doing anything, but being a full Bitcoin node means that you're contributing to the network's reliability, because it just makes it more decentralized, where like if big parts of the network were to go offline suddenly, the rest of the network could continue to carry on until those other nodes pop back online. So in Bitcoin, like people care a lot about being able to run full nodes. And that goes into, remember when we were talking about that whole like Bcash war, where the Bcash people were trying to make a change that would increase the block size. And by increasing the block size from 2 megabytes to like 8 or 32 megabytes, which they were trying to do, that would increase the required memory in order to run a full Bitcoin node and validate the state of the network. And so that was like the Bitcoin people who ended up winning out. They viewed that as a threat to the decentralization of Bitcoin, and it gave miners more power, because running a full node means that you're checking the work that the miners are doing. The miners are crunching numbers, putting forth transactions, and then the nodes are who check to make sure that that what the miners are putting forth follows the rules of the network. And so it's really important to have a lot of nodes who are not mining, who are just like, people that have like a small Raspberry Pi or like maybe a laptop that's just like connected to the internet fully and is validating the Bitcoin network. Like it's an important check and balance that, like, in order to keep that fixed supply. So Bitcoin people care a lot about that, but Ethereum people don't. Ethereum people care more about like the developer platform that is Ethereum. And since like Ethereum itself, it's not so much like gold. Like Bitcoin's like gold, and so like, the thing itself is like the important part. Whereas like the main use case of Ethereum is paying for those gas fees. And so the main use case of Ethereum is like pretty much like its use as part of the Ethereum like platform for running smart contracts. Like, and so, individual, like, and because that's the priority, it requires people, or like, because that's the priority, it requires things like faster throughput, more transactions per block. And so like, Ethereum's block runs at, every 10 seconds there are new blocks, and the block size is larger. I don't know what it is exactly, but the block size is larger than Bitcoin's. So the Ethereum blockchain just in general is so much bigger, bigger than Bitcoin. And so it like literally takes days in order to sync a node from scratch. And so like, that's kind of what he was really poking fun at. Not that they couldn't estimate what it was, because like, they can estimate what it is. It's the fact that everyone's estimates were relying on third-party sources of data. And that's like what this whole thing was all about, really. It wasn't really about the supply, which like Ethereum people are much more lax on supply. Like they don't really care about the supply. Whereas Bitcoin people really care about the supply. But then they also don't really care about everyone being able to validate what the supply is. And Bitcoin people do. So it's kind of like, I see where they were kind of going with it, like making fun of Ethereum for that. But it really just highlights the cultural differences between the two groups, and like really what like the goals and the purpose are of these two different ones. Where like Bitcoin people think everyone should be able to validate the supply, and Ethereum people don't really care who's validating the supply. And so some people viewed it as like a controversy, and then other people were like, okay, this is pretty stupid. Like, yeah, we can check what the supply is, and it doesn't really matter what it is because we don't latch onto that. So that was kind of the source of a lot of the drama in there. And they were just laughing at like how long it takes the Ethereum node to finish syncing, because you have to download it from scratch. So like we look up the Ethereum node size. See if we can find. Okay, so as of April, it's now 4 terabytes of disk space. I don't think I have 4 terabytes of storage on anything. So like, it's like it could be an issue for Ethereum in the future. You never know. But like, it's really interesting to see how these different cultural elements play out in real time. And so like while that was happening, all this craziness was going on. Like while the Bitcoiners were focused on being able to calculate by hand what the ETH supply is, there's like been all this craziness in the DeFi space. And so all the Bitcoiners, like in a lot of ways, like the Bitcoin maximalists, they just miss out on so many opportunities because they just have their head stuck in the sand and they're not looking for new opportunities. And so I think that could hurt a lot of the credibility of like the Bitcoin community and a lot of their purchasing power, because like, if you have Bitcoin, you want Bitcoiners to be making as much money as possible, because then they have more money to buy more Bitcoin with. So like this whole concept of Bitcoin maximalism, it's really destructive, because if like the only thing they're doing is holding Bitcoin and not selling, like, yeah, they're not pushing the price down, but they're sure as hell not pushing the price up. Like you should want Bitcoin people to be like having new money coming in, and investing in other things is a great way to get new money coming in. So that's like where I think that like the whole like Bitcoin, like I think in a lot of ways, the like Bitcoin maximalist community, they're focused on the wrong things, and they don't open their eyes to opportunity. And those opportunities are, what can, like if they think they're helping push the price up by just hodling their one Bitcoin and not doing anything with it and not taking risk on other things in order to gain more money so that they can buy more Bitcoin, like, they'll do more for Bitcoin's price by investing in other things and getting an ROI on those that they then settle their profits into Bitcoin. Like Bitcoiners should be trying to extract profit from other projects so that they can buy Bitcoin with it. Like, but a lot of them are just like stuck in this, like everything's a scam mentality. And I think that's actually, probably going to hurt the price of Bitcoin in the long run. So hopefully there's going to be like a big wave of like this DeFi innovation, on top of just like underlying, like Bitcoin's just going to be going up in general, maybe not as fast as some of these like higher risk assets, but like, I think if there's like continues to be a big difference in the ROI of people that are investing in DeFi products versus people that are just like hodling Bitcoin, people will come around, and so maybe that'll change in some time. But it's more Bitcoin for me to be buying. If all these Bitcoiners that hated on Hex didn't double their net worth because they didn't invest in Hex, then that's more Bitcoin that I can buy, from the profits that I made from the thing that they wouldn't touch.